What's up, real estate investors? Look forward to talking to you guys today about how to keep more money on your rental properties. Now, on this channel, we actually talk about how to buy as many houses as you want during a 30-day period of time while you cherry pick the very best houses for yourself. Okay, and one of our income strategies, we have 6 different income strategies every year, whenever you're using my methods in real estate. All right, so definitely click the Real Estate Made Easy course if you'd like to get into all of that. One of the income strategies you can tweak, okay? You can tweak little by little to make more and more every single month, okay? That's your rental income. And today we're gonna talk about a few things that you need to not do in order to make the most amount of money per month when it comes to your income and expenses and your rent checks. My name is Sawan Belcher. I'm a full-time real estate investor, and now I got over 50 doors, okay, that I rent out. Okay, they're mine. I get rent checks every day. It's amazing. It's amazing. And on this channel, I actually show you guys how to do the exact same thing. Today, I want to talk about some casualties that you shouldn't be doing, right? So that way you can keep your cash flow, so you can get paid more. Now, the first thing is inside of the rehab. Do not spend too much money. Now, I've always been super cheap and always on a budget. Actually, my first 2 rehabs, I did a lot of work myself. Never do it again. The worst workmanship ever. But sometimes you got to do what you got to do to get in the game, so you can fit where you can fit. So I get it. But you have to be cautious about what you're spending, okay, inside of your properties. Now let me give you an idea. So one thing that I didn't used to do was tile surrounds, okay? So typically there's a tub, and behind the tub, right, there's some kind of surround protecting water from hitting the drywall, so mold won't occur, okay? So sometimes it's like just a plastic surround, and sometimes it's tile. The cheaper option, would seem like it's the plastic one, because it's a whole piece. You just put it up there, put some caulking around it, boom, it's up, right? $150 and you're good. But over time, I have noticed that inside of your materials can either cost you right now or they can cost you later. But what I've learned is that either way you gotta pay, okay? Either way you gotta pay. So you need to make sure in your materials that you're buying, you're not overspending, but you're also not underspending, okay? One of those things that I find is that tile surround. Definitely all the way up to the ceiling tile. It looks the best, so you're able to get more in rent, but then it also, keeps the water out the best, so that way it can stay nicer, and don't be cheap. Go ahead and fix that plumbing while you're in there, okay? But do not overspend, okay, on your materials and your labor. The next small thing is screen doors. Rental units do not need screen doors. Is always something. Now let me be honest with you. I love screen doors on my rental properties. I like keeping the door open. I like, seeing the sun come through. So I have screen doors on all of my properties. But after doing the taxes for last year, I realized that a lot of the screen doors had to have something fixed on them, whether it was that little spring or, the wind caught one of the doors and snatched it. We definitely had a lot of screen door mishaps. So me personally, I'm still gonna do them, but you might not. You might be okay with X amount of your plan and saving $100 or so a month on it. Believe me, that counts. Next is in your multifamilies. One thing you'll notice is, this right here is a duplex that we're in. It's most of the time that the water is one. Now in a duplex, you think the Duke Energy, this side has their own meter. That side has their own meter. The gas, this side has their own gas. You would think that the water would be the same. But what I found out over time is that when people have converted these single family houses, right? So they have one single family house, and for whatever reason, zoning has changed, and they will allow, 2 units, 3 units, or 4 units in one house, that typically people do not change out the water. Like, they don't separate them. They don't make a sub-meter. So watch out for that. So whenever you see like a listing come up or lead come up, that's a 4 unit or 3 unit or 2 unit, see if there's actually a sub meter on the water. Okay, because on this unit, I didn't realize that. I didn't realize I was gonna have to pay for water for the tenant. So at first I didn't build it in the rent. I thought I was gonna receive X amount, but I received X minus the water. Okay. Not cool, very not cool. And after a while, that could really eat up your cash flow. You know, my net per door was like 100. So if the water bill on these 2 units is 130 bucks, you see what I'm saying? I'm now negative on this unit. So that's a huge thing that you should be looking out for, is if the water is connected, and then if it is connected, how much will it cost you to sub-meter it out, having a licensed plumber come in and permit the whole thing and separate it so the tenants are now responsible, or creating a bill back system so that way you get the water bill and you can now bill it back to the tenants so they can cover it and you can make more cash flow. Okay, now the next cash flow busting thing, attesting your property taxes. Now this year, I don't know about your county, but our county, they did like a citywide, just, I'm gonna raise your taxes. Okay, I don't know what that's called, but I call it a shakedown. Okay, they literally went to everybody in the city and says, hey, your property taxes, the property value was $100,000 on your property, and because of that, you were paying $700 a year for property taxes just to own this piece of land in this city. Now, because of the market going up, right, your $100,000 house, you know, is now a $250,000 house. We're gonna go up on property taxes on you. Say that your property is worth more, because it is, and we're gonna charge you, instead of charging you $700, we're gonna charge you $1,400. Now, one thing that you can do is you don't just have to take it. They'll send you, literally, on every property that you own, they will send you the new bill. They will also send you how to attest your taxes. Okay, it's literally a 3-step process. So simple, so simple. Get comps in the local area from a licensed realtor. So that's easy, connect with a licensed realtor. Get them to give you low comps. Don't have them get you the high comps. Have them get low comps for you, and you simply send it into the city and you attest the value, right? The new property value. So it should be showing a lower property value than what your new property value is, right? It doesn't mean that your house is worth less. It just means that what the city has recorded, you're gonna be able to pay less in taxes. Hope that makes sense. And you just send them in, right? And they'll make some kind of adjustment. That doesn't mean they're gonna come all the way down to where you think you should be, you know, but they're gonna make some kind of adjustment. And because you lowered that expense, you still have the same amount of rent coming in, you lower that expense, now you're able to make more cash flow. Okay, now another thing that you should be attesting, or just kind of like shopping around, is your insurance, your homeowner's insurance. You know, over time, you'll realize that insurance companies make the most amount of money on their customers that have been with them for 5 years. Okay, because in the beginning, you know, everybody's shopping for the best rate. Okay, but with mortgages, most mortgages are principal, insurance, taxes, and interest all in one payment. That means that the insurance company sends a bill to your mortgage, and your mortgage pays the bill. So over time, over the next 1-2 years, all of the increases on your insurance go directly to the mortgage company and not you, the owner. So if you're not paying attention to that, you're gonna end up paying more in homeowners insurance than you should be. So you need to be sitting down every year, okay, with your agent or multiple agents, and getting that insurance money down, okay? Even if it stays the same, you're winning, okay? If they save you $10, $100, you're winning. You just got to be looking at the numbers to actually make sure, okay, you're making money. Make sure you're, you know, paying the least amount of money for the most amount of coverage on your homeowner's insurance. And then lastly, you just got to keep up with all of your numbers, okay? I love the tax season, not because of the preparation that I have to do to get all of my numbers to my CPA, but more so because it gives me like a true picture on what my business actually looks like. I go through all of the income that we made, I feel good about it. When I go through all of the expenses, I say, hey, look, I could have spent less here, or I could have changed a certain product, or now I'm glad I know better than I did before. And really knowing your numbers, you know, you have to be able to track your numbers in order to know your numbers. So first of all, I use QuickBooks, okay? If you're not using QuickBooks, I'll leave a link below. Get it, force yourself to do it. You can connect all of your debit cards, all of your credit cards, your checking account, your Home Depot account, all of your stuff, all of your financials into that software. And they'll help you start monitoring your spending, right? Monitoring your income. So that way at the end of the year, you have nice spreadsheet reports, okay? You actually have a business on paper versus you just spending frivolously, cash apping everybody, paying some in cash and not, not really keeping up with where you're spending money. So I definitely want to encourage you guys to make sure out of these things, if you have rental properties or if you're looking to get into rental properties, is that you actually look at the expenses that you have, manage those to make sure you're not spending the most amount of money, that you're decreasing the amount of expenses and increasing your income, so that way you can live your ultimate dream life. Okay, so if you made it this far, be sure to press the subscribe button, press the like button, and remember, this is you taking action. Okay, have a blessed day. Peace.